Hello everybody! Are you guys ready to jump straight into this video? I'm going to turn you guys by the end of our time together today into a pro options trader ready to 10 times your money just like I did. We're coming with the energy today, so sit back, strap in, and let's get straight into the money. Today we're going to have a few segments. I'll put up on the screen the different time intervals in case you guys want to skip around, but I really recommend you guys stay and watch this video all the way through because I really am giving you guys the juice and the secrets to becoming a profitable options trader. Alright, without further ado, here are our segments for the day. Segment 1 is going to consist of the mindset you need to becoming an options trader in my personal outlook. Segment 2 is going to be resources needed to be an options trader. Segment 3 is going to be a deep dive into what an option truly is and all the details surrounding them. Segment 4 is going to be how to chart your best entry and exit points. And segment 5 is going to be a summary and explain how to really put all of this together. Time to get into the precise mindset you're going to need. Success in day trading isn't just about the strategies and technical analysis you employ. The right mindset is crucial. It is a must. Alright, so first you must embrace discipline. Stick to your trading plan and your risk management rules no matter what. Second, stay emotionally detached. Don't let fear or greed drive your decisions. Treat each trade as a business transaction, which it is. Third, focus on consistent small wins rather than chasing these big profits. They may be nice, but we need to build up steady gains over time because that is the key to long-term success. Fourth, we need to accept losses as part of the game. You win some, you lose some. Learn from them, but don't dwell on them. Move on to the next opportunity always. Fifth, we must continuously educate ourselves. Markets evolve, and so must we. Lastly, you need to practice patience. This needs to be number one. Wait for high probability setups rather than just forcing trades out of boredom or your fear of missing out. Alright guys, we're getting straight into the resources that you're going to need. I apologize if the audio is a little bit different. It's a different source that I get to record from when I am screen recording my screen, like I'm showing you guys. So for the first resource you're going to need is your brokerage app. Like I said, I recommend Robinhood just because it's pretty user-friendly. It has a nice UI, and I just think it's the best beginner's app. So here we are, we're right on it. This is where you do all your trades from. We can see we're having an okay day. It was better earlier, but you know what? We hold. Market going through a little red, but you know, we got a couple that we're up big on. 33, 24, 250%, 500%, you know, doing pretty good. So you're going to need your brokerage app. Then I recommend you get a charting site. I recommend TradingView. It's pretty good. It has a good free trial. As you can see, I'm on the free trial right now, or the free version, and it's still really good. And then you're going to need your news sources, which I recommend Financial Times. I recommend Yahoo Finance. They are great. And I recommend X because you need to stay on track of the news. I remember I had an Apple call that I made $2,000 on just because I found out about the Worldwide Developers Conference before other people, and I found out that they were going to be partnering with AI. They partnered with OpenAI, which is ChatGPT, and their stock price shot up to all-time highs. And I knew that because I did my research with these news sites. I recommend these three. X is great because you can find like-minded people. You can join communities. You can do all of that. You can search hashtags, see what's trending. It's great. And then Yahoo Finance and Financial Times. These are going to be the 5 main things you're going to need becoming a trader. Everything else is kind of whatever. As you can see, the UI here, it's pretty simple. You know, you get everything. You get all your positions over here. You got the obviously your money right here, buying power down here. It's pretty good. It's, you know, it's a fun little kind of, you know, it makes trading a little bit more fun. You know, you got all these cool different, you know, decals and icons and stuff, and it just makes it seem easier and less daunting, in my humble opinion. So now we are going to get into our next segment. All right, we're back on Robinhood. Like I said, you can use any type of investment or brokerage app. I'm just going to show you guys on Robinhood. So we're going to get straight into what an option truly is. So now you may have the definition of, oh, an option is going to be you're buying the leverage to 100 shares and this and that, but what exactly is it? So we'll go over here. In Robinhood, you can see all of my options. I have a lot this week. We had an okay day. We're down a little bit, but I'm not too concerned because a lot of Mondays are just me buying setups for the week. So I bought a lot of stuff for this week and kind of went down, but I'm not really worried. It's all going to come back up. So we shall go to a contract. This is what a contract looks like. Okay. So first, let me show you how to go and place a contract. This is Marathon Digital. So you see this thing here is you can buy. This is how you buy the stock, and then you go down here and you go to trade Mara options or trade whatever ticker options. Ticker is the 4 letters that describes stock. So Marathon Digital is Mara. So we're going to go to trade options. Here you have a buy, a sell, a call, and a put. As I explained in my last video, you have a buy call and a put, and you can sell a call and a put. I don't sell calls and puts because that requires you to have 100 shares of the company, and I just don't have the capital, which capital means money, to own 100 shares, and to me that's just not as profitable. So you can do that if you have the money, but I won't be going over it. I'm only going to be explaining to you guys how to buy a call and a put. So you have your strike price over here. You can see on the left. That is basically where you think the stock's going to go. So you can buy out of the money, which is above. The strike price is above the share price. And you can buy in the money, which means the strike price is below the share price. So that basically means that you don't need the stock to go back up as much in order for you to make money, but it costs a lot more. So if it does end up going down, you're going to be losing more. But in turn, if it does end up going up, you're going to be making more. So usually I stick between the first 3 in each category. As you can see with this Mara, I bought at 19 because you can see the little +1. That means I have a contract. All right, so that's really the whole gist of actually buying it. But I'm going to explain to you exactly what you're doing. When you buy a contract, as you can see over here, the ask price, it is 53 cents. That's 53 cents times 100 because you are buying 100 stocks. You're buying the leverage to 100 shares. Okay, so it's 53 cents a share versus $19.58. So you're getting all the profits of that for only 53 cents. So that's pretty big. That's pretty important. So you're paying $53, you basically get 100 shares, theoretically. So we'll go to the Mara contract I have. I'll explain to you exactly what a contract looks like. Where is it? Actually, we can just go to any contract. Let's go to a Marvel contract. I did pretty good on today. So this is what a contract's going to look like. It's going to go up and down exactly like the stock, and it usually follows the stock. So if the stock goes up, the contract price is going to go up. Stock goes down, the contract price is obviously going to go down. This is exactly what it looks like. So we can come down here. It's valued at 260. Its expiration date is 7/12. That means on July 12th, that's when this contract ends, and I either make money or I lose money. So we come down here, I'll go to simulate my returns, and I'll explain to you exactly what that means. So right now, if I held this and the stock price does not move at all, I will lose money. But if it starts going up, obviously I'm going to make money. So now it needs to hit my break even on expiration for me to make any money. So the most money you're ever going to make is right when you buy the contract. That's why you typically don't want to hold contracts too long. I usually only hold them 1, 2, maybe 3 days at most. I usually want to sell them on like a Thursday. Maybe I'll hold it for a Friday and sell early in the morning. Because the longer, like I said, you hold, the less value you get. But in turn, that doesn't mean that you want to sell when you're down on the first day. But again, what if there's a good day the next day? It can go right back up. But you always want to have a stop loss. A stop loss is basically a price that the stock goes to where you're like, okay, I'm going to lose too much money. I want to get out now to minimize my losses. Typically, I respect stop loss about 2 or 3 days into the contract because if I'm down a certain amount, I know that I can't really make too much more money off of this. The stock probably isn't going to, and I'm going to sell before I hit my max loss. theoretically, this is exactly what a contract is and how a contract works, how an options contract works. So if you're on Robinhood, you're going to see them all right here. These are all my contracts. You can buy a lot of contracts, and you can also buy multiple of that same contract. So here you can see I have 578 calls for Nike. I have 527.5 for Palantir, 526.5 for Palantir. So typically you're going to want to buy multiple contracts because obviously if you're high on a stock and you believe that it's going up, you're going to want to buy a lot of that. But you also don't want to buy the same exact call or the same exact strike price, the same exact contract, because what if that one does bad? You want to save money to pivot, which pivot means when your stock goes down, you're going to want to be able to buy it at its low point so that when it starts to go up, theoretically you make double your money because you had two contracts, each bought at a different price. So it brings your average price down. So you don't need it to go up as much for you to make money or for you to at least break even. That's how I cover a lot of my losses. So that's why I'm holding a huge Nike position. I have a lot of Nike because, as you know, if you follow the stock market, Nike has been getting hammered. I have a massive Nike position. At least massive for me. It's about $2,000-3,000. So that's 30% of my portfolio. So I usually hold some money to be able to pivot a stock. But that is basically what an option is in a nutshell. So it's obviously going to take you guys a long time before you're fully comfortable with an option. But this is the best way that I can explain it to you. And now I'm going to take you in and I'm going to show you guys exactly how to chart so that you know specifically right when to buy that option. And then after that, you're going to be pros. All right. We're going to jump straight into a little overview of technical analysis or charting. Technical analysis is basically when you use a chart to determine when you should enter and exit certain positions. So I'm not the biggest technical analysis guy, but I'm going to go over what I know, and it's more than enough for you guys to get started. So we're going to keep it pretty surface level. Don't want to get anybody too confused because it can get confusing. Obviously, what you're looking at is a little difficult to kind of grasp if you've never seen it before, but I'm going to explain it in as best a way as possible to the beginner. So first off, this is TradingView. This is the free version. They've got a great free version, like I mentioned earlier. I would highly recommend it for your charting. So we are using Tesla stock. So I'm going to go over a little bit of TradingView's UI. So up here, you have your intervals. So these are called candles. If you go in super quick, they kind of look like candles. So they have wick, which are these little smaller lines, and they have the actual candle, which is this bigger kind of rectangle. So up here, when you go minute, you can go to seconds. That means these come up every second. I can't do that because I'm on the free version right now. But you can go minutes, you can go every 15 minutes, you can go, hours, days, months. Typically, I stay around 1 minute, which is easiest for me. All right, so I'll explain to you exactly what a candle is. A candle basically explains if the stock was going up or down. So see, when you have a candle like this, that shows where it went. So it went from 261.75 all the way down to 260.95. So when you see a little wick, that means that eventually it went up there, but it came all the way back down to right here. So typically the best wick that you want to see is when a stock either has a red candle that it went all the way down. So we'll find a good red candle for me to explain to you guys. There's not a lot of red candles because Tesla stock's been going crazy, but a good red candle would be right around over here. I would say this is probably the best red candle that we can see is this one right here. So see, you have it goes red all the way down here, but it bounces back up. That's what you want to see because that signifies that the stock bounced down, so the stock went down, but it came right back up within a minute. That shows you that it has strong forward momentum going forwards. Here's a good one forming right now live. See, it went down and it bounced all the way back up to now that candle turned green. That's what you want to see. So it's always a good entry point if that's what you see. Now, a bad one that you'd want to see is one where it's green high, so maybe like right here, where it goes up green, but it comes back down. So that means it went up here, but it came down. So what you want to see is a red candle, which again, Tesla stock's been going crazy. There's not a lot. But yeah, this is a really bad candle to see. You wouldn't have wanted to hop in right here because as you see, it went red. But then once you see this candle, where you see the red come down a little bit, and it bounced right back up, that's good because here, we got green, and that stock price continued up. That's really what we want to see. So now, another great thing about this is you can draw trend lines. So this is what I call a trend line. So you see, market opened right around here, popped up, and then this is our low starting. So it's probably saying when the market opens, it either opens obviously green or opens red, depending on what it did pre-market and overnight. So you typically go around 9:35 to kind of do the trend line because this is kind of it's evening out for what it's going to start after the day. So as you can see, it gets choppier now, whereas just the straight up because it started green. So this was its low of the day, and we followed it up to its other low that follows along the trend line. So now we developed a trend. But a better way to describe the trend line would be making this. We follow it more closely where it is right now. So we call this the trend. So we see it's come out. So see, it's peaking up. See, we have all these green candles. Now again, this probably wouldn't be the best point to jump in because you see it's waking up and it's coming back down a little, pushing up. See, now we're starting a downtrend. But now, see how we drew our trend line? This is a great opportunity because now if it bounces down to this trend line, we know it's not going to really go below this. This is now support, which support means it's not going to go below typically. If it bounces down to right here, that's a buy, and we ride it back up. See, coming back down. So if it hits this, we would go boom, and we come right back up, and that's where we would buy. So this would be your entry. Now a good exit would be able to draw another trend line through the top. Draw a trend line there. So now a good exit would be if it hits up here. So say it comes back down here, which it might not because Tesla's been shooting straight up. But if it does, this is where I would enter, right around here. And this is where I would sell when it hits right up here. So we're buying at 261. It would sell right up here at 266, which isn't likely to go that high all the time. No, it's not always likely to go that high. So you do want to make sure that you could sell around here. I'm saying this is the absolute maximum that I would hold it for, and I would sell right there to take a good amount of profit. So for me, that's basically all the technical analysis I do. If you go on different videos and you search it up, there's more to it. But I don't really get too big into technical analysis just because I believe that once you do way too much, it gets overcomplicated. And this is really all you need. This is all you need to follow is just follow the market trends by drawing your own trend line and buying when it hits the bottom, selling when it hits the top. That's all I really ever do. So I would recommend you guys do that if you're following my advice starting out. But you can always go a little bit more advanced. But if you're just starting out, I would recommend doing this. Yeah, that's basically all I have for you on technical analysis. Again, I'm not a huge technical analysis guy. This is all I do. But this is certainly enough. As you can see, my profits show it. So thank you. All right, you guys finally, you guys made it to the summary. So we're going to go over all the different things I mentioned and how to put them all together in one trading day. I'd show you guys exactly what I would do and how it all works. So to start off the day, I'm going to be waking up. I am not subscribing to Financial Times. How do we get out of here? Well, regardless, we'll go on Yahoo Finance. I'd scroll through. I'd see what some of the biggest news is for the day. And I would also go on the market and I'd be exploring all the different positions I already have, seeing exactly where, the money is today, what's going up, what's going down. And typically I find stock that's down pre-market to kind of monitor the, potentially about buying the dip. So I find it on here. I'd find it on X, Financial Times, but we're not subscribing right now. And I'd see what I kind of want to target. Then I would come over to trading view like I showed you, and I'd put that in and I'd start charting my entry. So let's say I want to do Amazon. I'd set up a trend line down where it was low early on in the day. Then I would set where it's highest and I would monitor it to where it's going to drop. So now let's say we're targeting Amazon. Let's go. I'd pull up Amazon. I would pull up Amazon options. I'd went over exactly what the strike prices are and what an option is. So I'd pick what strike I'm going for. I'd wait till Amazon hits my entry point, which I'd say is probably going to be around here. So if I was charting Amazon today, once it hit here, I would have bought that up immediately. All right. So let's say, and I would have bought it and I would have wrote it out. I would have come here after I bought it and I'd be watching it. And if it ever got up to around here, which it did earlier on in the day, I would take it. But if not, I'd find it and I'd be moving my stop loss as it goes up. So say we're following this trend line, it comes up. I'd probably now set my stop loss to this little red peak right here. Or picking whatever. You guys get it. Right there. So if it came back down to here and broke below that, I would probably get out. And I would monitor, I would put my break price to where I want to sell out of the contract. I'd put it up to its more recent high of right here. So I bought it here. I wrote it up. Now we're sitting about right here. I'm waiting for it. I'm selling out of it here. And I'm going to sell out of it down here if it breaks here. So theoretically, since we bought it down here, we still are making money if we sell it here, but it just keeps us from actually losing money. So you take the risk out of it, you maximize the reward. That's specifically what I kind of do on the daily. I go through my 3 beautiful, little sources. But I did leave out one of the most important ones, which is my YouTube. So I appreciate you guys for being on my video right now. But if you guys aren't subscribed, I would recommend subscribing because every day I'm going to be releasing a short kind of previewing what I believe is going to be the best pick for the market tomorrow, and then a little summary of the previous day's pick. So I'm going to start posting those every day. I've posted in the last 3 days, and it's going to be really, it's going to be really good. So I'd recommend doing that, and I appreciate it. Of course, if you do subscribe, please like the video. And that's mainly kind of it for my day today. So if you guys want me to go in depth on any of the things that I mentioned to you today, please leave a comment. Other than that, thank you guys all for coming out, and please just update me on your journey. If anything helped you, let me know. Feel free to leave comments on, if you guys use my advice and it works out. If you have any questions on anything, just let me know. I'm always here. If you know me personally, text me. I'm always happy to help. I'll always, respond. I get a few people that are doing that, texting me consistently about it. I'm always happy to help. So I appreciate it, guys. Thank you all for coming out, and have a good one on your journey. Bye-bye now.